Today we are going to talk about the collection of income taxes. Imagine you are both the manager and a shareholder of a corporation and receive a salary and dividends in return. In addition, you have other income sources. All income is subject to personal income tax. Now you wonder how the taxes are collected. One method of tax collection is through tax assessment. The taxpayer fills out a tax return and submits it to the tax authority. Based on this tax return, the tax authority determines the tax due and notifies the taxpayer by an assessment notice. Thereupon, the taxpayer pays the tax. For recurring taxes, such as income tax, tax returns are typically due annually. The tax authority may assess monthly or quarterly prepayments of taxes, based on the previous year. If the sum of prepayments exceeds the final tax amount as shown by the final assessment notice, the taxpayer receives a refund. Conversely, if the sum of prepayments is less than the final tax amount, the taxpayer must pay the difference. However, filing procedures require robust enforcement mechanisms. Otherwise, taxpayers have no incentive to report their taxable events or the correct taxable amount to the tax authority. To minimize underreporting of income, tax authorities rely on time-consuming and costly enforcement mechanisms, such as tax audits. Preventing underreporting entirely, however, remains difficult. This is why some taxes are directly withheld at source at the time of payment. This collection method is applied to labor income and certain types of capital income. A third party, an intermediate, such as an employer or a bank, deducts the tax amount from the gross payment and submits it to the tax authority on behalf of the taxpayer. The taxpayer then receives the net amount of income reduced by the tax withheld at source. Even if taxes have been withheld at source, taxpayers often still file tax returns. In such cases, the withholding tax is provisional, and any necessary additional payment or refund is made after the final tax assessment. Alternatively, tax collection may occur through a final withholding tax. In this case, the withholding tax constitutes the final tax amount of the income recipient, and no separate tax return is required. This method is commonly applied in relation to non-resident taxpayers. In summary, there are two primary methods of income tax collection: tax assessment and taxation at source through a withholding tax. While in the case of tax assessment, taxes are collected after a tax return is filed, taxation at source relies on withholding taxes on the income. Under source taxation, the taxpayer only receives the income net of taxes. Withholding taxes can either be provisional or final.